housing market crash, doom and gloom. That's what everybody's talking about. But what do you think? So a lot of times there's a lot of people who get on social media and they just want to spout off all this information or misinformation just for likes and clicks and shares and things like that. But it's the professionals that are really in the business who you should be referring to for this type of information. Now, I'm definitely here as a person who is trying to put you on game, who's trying to give you the most accurate information. For one, not every market is the Dallas market, the Austin market, the Arizona market, the Florida market. We do have pockets for markets. In particular, we're here in the Houston market, sub-Houston market in a sense, right? So let's look at the numbers for our area so we can kind of determine what the future looks like for us. Now, let's be clear. The market has shifted. It is getting a little bit better for buyers, but let's see exactly what that means. Okay, so there's a few reasons why I do not see a housing crash happening anytime soon. Okay, so the first thing that you need to know is that as realtors, one thing that we are concerned about when we're trying to determine pricing is the months of inventory. Now, months of inventory is basically how many listings are active on the market versus how many listings sold. That tells us, okay, this is how many months of inventory we would have on the market right now if no new properties came onto the market. For the last year, we've been hovering around 1.3 months of inventory, and that is extremely low. That's why you hear people say low inventory or housing shortage, right? Because the inventory has only been a supply of a little over a month on average, right? And what we call a balanced market is a market where there's inventory for 4 to 6 months, okay? But like I said, there has been a market shift. So let's look at Lake Jackson. Currently in Lake Jackson, there is 65 active listings. Now, if we look at homes sold, that's right around 44. And you might say, hey, look, well, the market is shifting. Well, also we look at the homes that are pending. And right now there are 43 homes that are pending in Lake Jackson. So that's pretty much in line with what we've seen before. 44 homes sold on average for the prior 3 months. And there's 43 pending homes currently, right? So that gives us an inventory of about 1.4 months, right? That is still pretty low. So in order for us to get to a balanced market, we would have to nearly triple the amount of inventory that's currently in Lake Jackson. Yes, the inventory has gone up, but we need to triple that amount to reach a balanced market. And we need about 4 times that amount if we want to shift completely into a seller's market to where you start to see something that resembles a crash, right? So that's for Lake Jackson. Okay, so in Angleton, if you exclude the new construction that's in Angleton, because there are quite a bit of new construction homes that are available in Angleton, there are 70 active listings. So if you look at the recent sales, we're averaging about 35 homes sold in the last 3 months in Angleton, and the current pending homes in Angleton are 34, right? So that gives us an inventory of about 2 months, right? So again, a balanced market is about 4 to 6 months, so we would need to double the amount of inventory that is in Angleton in order to resemble a balanced market, and we would need to just about triple that amount before we start to resemble anything of a buyer's market or a housing crash. So, I mean, these are the facts. Now, you also look at the data that shows mortgage rates fell yesterday. Mortgage rates went down. So if you understand the treasury market and the way that the mortgage rates are tied to the 10-year treasury, then you understand that this is why even if the Fed is raising interest rates, that doesn't directly reflect mortgage rates, right? it is an indication of the way mortgage rates are going to go, but it does not correlate directly with mortgage rates. So you want to look at the 10-year yield. These investors who are looking for safe investments, they still feel as though mortgage-backed securities are the safe investments. Now, why would someone put their money into a mortgage-backed security when they expect the value of that security to decrease? I mean, you follow the numbers, you follow the trends, and it's just not reasonable to expect a housing market crash. Of course, anything can happen. Protect yourself, do your own due diligence, but that's my 2 cents on it. You guys have any questions, let me know. I'll be glad to help you.